Hi traders, I'm Ross Maxwell and welcome to the latest edition of the Keyzone Traders Trade of the Week. Apologies there wasn't one last week. As you can probably tell from my voice, I've been run down and had a little bit of a cold, but we're back this week. What we're going to look at this week is a trade that we actually took last week, and it was from a zone that we've been talking about for quite some time in our zone reports, which can be found on our Twitter channel, which you can subscribe to and follow in the box below. You can find the link to follow us in the box below on our Twitter channel, where we give out our zone reports every single morning to look for the right areas of the markets to trade every single day. So with that being said, let's go take a look. Hi traders, so this is going to be a look at a trade that we took last week. Now this was on Wednesday the 6th of October. This was the report that we issued in the morning. As I mentioned in the introduction, these reports at the moment, they will end up making part of a subscription service, but at the moment they are going out free on our Twitter channel, so please click on the link below, come follow us on Twitter. We'll be putting these out every single morning. It gives you the zones of interest and of support of resistance that you need to be aware of in that session, and a little bit of analysis around those zones. So on the 6th of October, we said DAX is still bearish and we should concentrate on sells unless we see higher time frame reversals from the key zone at 14,805 to 14,835. So this, we had 14,805 to 14,835 as a very, very key zone in the market. We had actually been talking about it ever since the 21st of September, so for a good couple of weeks. You can sit here and see that we said we open up moves towards the next key zone of support at 14,805 to 14,835. So we had been looking, and it had been an area of interest for us for quite some time, for at least a couple of weeks. But we had said that because the market was bearish, we wanted to be looking for higher time frame reversals. So if we go and have a look at the charts, the reason that we were bearish on the market at the time, so if we look here, we'd had this impulsive move down here, we'd had some recovery, and then we started getting these impulsive corrective moves on the higher time frame charts. On the daily as well, what had happened is we'd had this impulsive move down, and then would come up and would held this 20 moving average. So the market had showed some sign of weakness and the bears were making lower highs. So on the daily chart, we was starting to look a little bit weaker. Although the overall picture is still obviously very bullish, we had started to show signs that a retracement was coming in. And as I said, so when we're looking for really key areas of support, we go to the higher time frames and we look at the daily chart here, and you can see that there was some really key resistance support here. It also was here, and it had been resistance also here. So you can see it was resistance here, turn support on the daily chart. So therefore, this was quite a key area in the market that we expected. If we saw some higher time frame signals, that we expected that level to hold. So looking at the higher time frames, we look at the 1 hour and the 4 hour. The 1 hour, I mean, there's arguably a signal here. We came down and we tested the signal, tested the zone. The zone was 805 to 835, and as you can see, the low was 811. So it was towards the bottom of the zone, but the zone held nicely. We did have this reversal candle here, where you would have had to have taken a break of this candle up, but the signal wasn't quite good enough for me to take a signal. So we switched to the 4 hour chart, and this one actually was. And what was so nice about this one is, one, it is a much more relevant reversal signal. The candle is a bullish candle. The 1 hour, there was a tail on it, a slight tail, but it's still closing and finishing in the lower half of the bar. On the 4 hour chart, it was closing towards the highs. The market, as I said, the low was 411, and actually when you look back at the previous swing low, the low was 415.5. So we had just taken out that swing low as well, which is what we always like to see as well when we're looking for these reversals, just to take out the previous swing low or the swing high, even if it's just by a couple of points. It just adds weight to the trade as well. So we saw this signal. The high of the bar was 69.5, so we can enter there at 72. If I can find it there, yeah, 72. We have our stop below at 09. Down here. And we just go for a 1-to-1 target. So let me just move that back down to 09. Bear with me 1 second. Okay, so we had a 63-point stop, and we're going to go for a 63-point target. So our target was at 15,035. We had a 165-point target, so our target was 15,135. Apologies, my math needs a bit of work there. And as you can see, it broke up and it moved quite quickly to the target without too much retrace, without too much heat. It was a really nice textbook reversal, having just taken out the lows and from a very, very key support zone. So hopefully from this trade you can see why we used that support zone and why we saw that as a key zone, why we were looking for reversals from the higher time frame support, because the market had turned slightly bearish, and also hopefully you can see how much use those zone reports are for us in our trading. And if we show some patience and we wait for these really key zones, we can get some really great setups in them as well. So I hope you find this useful, guys, and I'll speak to you next week.